Hey, this is Matt from InvestiQuant. Today is Thursday, January 28th, 2021, and yesterday was a big down day for the markets. The markets gapped down sizably, and after a volatile early morning session, we consolidated and awaited the FOMC announcement. Once the afternoon session arrived, we got the FOMC announcement followed up by the speech, and then late in the day, we ended up breaking down from consolidation area and closing near the lows of the session. We had about 100 points of range in the S&P. We opened near the highs, we closed near the lows, took out all kinds of recent lows in the weak price action that was developing on very high volume, and was an overall very weak day in the market. So what I want to do today is look at what has happened historically following some weak action in the market. Let me go ahead and set this up. We'll be looking at all four instruments this morning. The setup's going to be based upon entering the market long at 9:30 a.m. Eastern time. That is the open of regular trading hours. The exit will be set to the end of regular trading hours, which is 4:15 p.m. Eastern time. Now for the opening filters today, I'm going to simply use open within the prior day range. Next, I'm going to go into price patterns, and I'm going to describe yesterday's action as closing in the bottom 25% of the daily range. I'm going to grab the patterns from the active today section over here. So I'm going to come down to the location of the last close, and I'm going to say that it was in the bottom 25% of the daily range. And then I'm also going to scroll down to this new lows section. It was a 10-day low close. I'm going to go ahead and add that to the price pattern as well. Next, I'm going to go into indicators, and I'm going to say that we closed above a 200-day moving average, but below a 10-day simple moving average, which isn't technically needed because we do have a 10-day low close. So by definition, it's going to be below a 10, but I went ahead and added it there anyway. And lastly, I'm going to hit view results. And here we go. These are the results of going long at the open of regular trading hours, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern time. So 9:30 a.m. entry, 4:15 exit. When you are following a 10-day low close where you closed in the bottom portion of the intraday range, but you are still above a 200-day simple moving average, you are opening within the range of that 10-day low close with this pattern. Historically, this pattern has happened pretty regularly. We've got 154 samples here for the S&P, 168 for the NASDAQ, 137 for the Dow, and 168 for the Russell. So all of these instruments have good sample sizes. And if we look at the win rates on them, win rates here are telling us what percent of these have closed above the opening print for the day. You see all of them are at least 55%, and some of them a little bit closer to 60% on that good sample size that we have to work with here. So the S&P about 60%, that's the strongest. The NASDAQ not far off of that at 58%. The Dow 57%, and the Russell 55% is the weakest of the group. If we look at the average win and average loss, you'll notice the average win and loss very similar in size there for the S&P. The NASDAQ average win a little bit bigger. The Dow very similar in size, and the Russell the average loss a little bit larger. And if you look at the equity curves, you can kind of see historically the pattern was not all that strong until somewhere in the last 5-10 years. It's really kind of come alive, and you can see the equity curve starting to spike here in the more recent years. There's the S&P equity curve, and if you look below, you can see the stats of just the different look back periods there. If you look at the last 5 years, I can highlight it here. You can see the last 5 years has been stronger than the overall sample. Last 10 years more in line with the overall sample, but you can kind of see that in the equity curve. NASDAQ as well. Let me click on NASDAQ here. NASDAQ, you can see the last 5 years very strong in the recent bull market when you get this type of pullback pattern. The Dow not quite as strong, but still favored. And then you can see Russell. This pattern really hasn't done much in the Russell. It has been pretty flat, and that's the one with the weakest win rate and the one with the largest average loss compared to the average win. So hopefully you found this helpful. Good luck today, and we will see you next time.